All right. Hey, everyone. I'm back. Welcome back. I streamed earlier today at 9:30. It is now just after 3 p.m. Eastern time. And here we are going to do the analysis stream. All right. This is my normal streaming time slot. So if you want to share what city, what country you're from, that's always a fun fact. I'm streaming from the greater New York City area. It's a little warmer here today, and that's cool. So in this stream, what we're going to do is we're going to do the analysis for the week. We have a couple of news events we have to talk about. We're going to take a look at Bitcoin, support and resistance levels, and trend structure. We're going to take a look at the NASDAQ. We'll take a look at some altcoins if you'd like. You could share them in the chat. We'll take a look at them. We should have some time because in this stream, I'm not going to use the Trade Scanner Pro. We're not going to take any trades because I had done that earlier. If you want to see how that played out, you can watch the earlier stream on my channel. And we had a nice trade at the market open there. All right. And the market's been kind of wild ever since. So anyway, I want to welcome you if you're new. And let's get this thing started, shall we? So the first thing I'm going to talk about here is the economic calendar. I don't have it up on here on this screen, but there's only a couple of events worth talking about here. All right, and the being aware of the economic calendar is very important as you start out your week. Hey, Hussein, thanks for joining. You want to be aware of what economic events are planned because there can be a surprise movement especially in the middle of the day if you trade intraday like we are at 9:30. So it's very important to be aware of what's coming out so that you could avoid getting caught in any wild moves and mitigate risk. So there was a few things like earlier in the week, like tomorrow, I saw like New Zealand had like a CPI, but none of that really matters. If you look at an economic calendar, there's tons of stuff on it. Hey, Peter, a lot of it is not even that important. So I'm going to point out what is important. Hey, Nugs, good to see you guys. So what we have starts this week. What the most important is Wednesday, right? Wednesday, we have retail sales, which I believe is a 10 a.m. number, 10 a.m. Eastern time. Double check those timestamps because sometimes it's like 10:30. I don't believe retail sales is an 8:30 number. It might be. Usually when we get news items, economic news items, it's either 8:30, 10 a.m. or 10:30. It's usually one of those, right? So we have retail sales on Wednesday. Then we have Chairman Powell. He has a speech. Now that's going to be important because when someone like that is speaking, especially right now, in light of the sensitivity with the tariff situation, they're going to be looking for hints. Now, the market is pricing in or has priced in a rate cut in June for the June FOMC meeting. If you look at, there's like a Fed tool that they use to give a probability of a rate cut, and they're pricing in a very high percent chance of a rate cut in June. So they're expecting that. There's an FOMC meeting in May, and then there's one in June. They expect the June meeting to be a rate cut. Now, they're going to be looking for hints. Is Powell going to give a hint or what? What's he going to say? He hasn't been very cooperative with the executive branch. You know, he's been doing, I think he's been doing just what he's supposed to be doing and and just trying to stick to his plan. But so that's going to be important. And it's going to be, we're most likely I will be streaming at that time. I'm not sure what time he begins speaking, but it's probably around 9:30 or 10 a.m. I'm not sure. I'll have to check. But if he's streaming at that time, I mean, if he's speaking at that time, it's going to be a tough market for us to trade because charts don't mean a whole lot when you have someone like that speaking, because the market's going to react to any little thing he says. If he hints anything that's positive or negative, the market's going to react. Charts aren't going to matter as much in that type of situation. So we'll see what we get. So that's Wednesday. We also have on Wednesday, we have Bank of Canada has their rate announcement. So that's important if you trade Forex, you know, any CAD crosses, anything like that, then that may have an effect. So you want to be aware of that. Other than that, I think there was European Central Bank on Thursday. They have their rate announcement. So again, that's usually at 3 a.m. Eastern time. Just be aware of it if you trade euro crosses or if you trade Forex. Now, on Friday, we have a holiday here. In fact, I received an email from a prop firm letting me know the holiday hours. So that probably means, I haven't checked the specific hours, but most likely that means at 1 p.m. Eastern time, the futures close. I'm guessing, or the stock market closes. Now, I'll be streaming on Friday as well, so we'll see. Now, I don't like participating during holidays. I really don't. When like you have like a half day, the volume is all like it's very confusing. It can be very hard because all the volume is basically shoved into a smaller time slot. And I really, I don't know. We'll have to see. I may just take it very easy on that day. We'll see what we can get, but I may not take any trades. I don't know. We'll have to see what the environment is like. But usually the best thing to do on a holiday is to just take the day off. From all the years that I've been doing this, that's the conclusion I've come to. It's usually a good time to just take the day off. All right. Anyway, so that's the schedule for this week, the economic calendar. Double check your economic calendars. Okay. Now, let's talk about, we'll start with Bitcoin here and then we'll move along. Again, if there's something you want to see in altcoin, please share it in the chat and we'll take a look at it. So the first thing I'm going to do is I'm going to make this chart bigger. This is my daily chart. This is a chart that I share on TradingView when I write my TradingView article. And in my article yesterday, I wrote that basically we're in the middle of the range. Now, as you can see, the market is so far adhering to my illustration, which is I'm anticipating a test of the range high. So there's a couple of important pieces of information here. For one, if you're shorting this now, it's a tough place, right? This is the midpoint of the range. So anything can happen in here. It may be a long, it may be a short. This is where if you're working on your 1 minute chart or your 30-second chart, you just try to do the best you can. Take your small bite and be done with it. Do not have any opinions here because this is a 50% chance of going either way. It's just a matter of news catalyst. Some nonsense news comes out one way or the other, and this thing spikes. Now, I suspect we test like the 88K high, this area up here. That's the range resistance. If you're looking for swing trade shorts, that's the place to look. That's your highest probability. But here's what you have to keep in mind. Don't lose sight of the bigger picture. This is a failed low double bottom. That's what this is. Failed low right here, double bottom. And actually it's a triple bottom. You have another low over here. And it's a higher low relative to the broader move. This low is higher than these lows. That's very bullish. So Bitcoin was never really that bearish. It's just a wave 4. This is typical wave 4 behavior. If this double bottom stays intact, that means we've never overlapped wave 1, which means the wave 5 structure is likely to follow. Wave 5 confirms at 109. So there's a lot of room here for that. And if it doesn't go up there, then most likely we're just consolidating around wave 4. Wave 4 can consolidate for as long as it wants. And it could do these complex, these compound corrective patterns. It could do all kinds of stuff like that. But it's important to understand that if this 74K low holds, if that's the low, then this is a good location for investing. Generally, it's still a good location. It's a good location for swing trades also. But if you're going to dollar cost average as an investment, then you're looking at sizing appropriately in this area, anywhere in this area. Okay, that's where you're using time, like first of the month, you're buying, $100 worth or whatever it is based on your plan. I've talked about that many times on this stream. You guys all know. You guys have been following me for a while. But that's investing. So you have a lot of room to play with here. You're not looking for precise prices. You're just looking for general areas and you're controlling your risk with your size. When it comes to a swing trade though, that's where you need either a test of support, another test, or perhaps we get a higher low somewhere in this area. Here, let me draw a little square there. Maybe we get a higher low somewhere around here. That would be another place for swing trades long if you get confirmation. The Trade Scanner Pro can help you with that confirmation, or you can just use a candlestick. That's the long side, and that's the side that I would be more confident about compared to the short side. So if you're looking at the short side and you're going to try to short this up here, which is going, I consider more aggressive, be prepared for that breakout. Like I said, it's just a matter of news. They come out with some strategic reserve nonsense, blah, 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 blah. We have no gold. Bitcoin is a new gold, whatever. I'm just making stuff up. You're going to get a spike to like 95K. And then that's when, hey, is this a good investment? Not at 95K. I mean, yeah, if you're averaging in, but the lower risk prices are now, even in the midpoint of this range. So you have to decide, are you looking at it from the investment perspective or the swing trade perspective? How you manage risk in each perspective is going to be unique to that perspective. Does that make sense? So again, short-term shorts, aggressive. This thing is likely to break out. It's a matter of news. If it pulls back, your swing trade long opportunities are going to be around this support. At this moment, there's no swing trade opportunities because you're in the middle of the range. There are only day trade opportunities like we had earlier. Make sense? All right. That's Bitcoin on the bigger picture. Now, remember, the goal is to assign probabilities. You can't see probabilities on the chart, but locations help us assign probabilities along with looking at it relative to the trend that it's in or the broader structure. If the broader structure is bullish, then we should expect more from support levels. We should expect support levels to hold. We should expect buying confirmations at support levels. Support levels are less likely to break on the relative time frame that you're looking at. Resistance levels are likely to break and not hold. So that's how you use that information. And then you judge it and you take your risk. Now, let's move along to the NASDAQ here. All right, guys, let me know if you have any questions. So we'll take a look at, let's start with QQQ. So the Qs are funky today, right? Here are the Qs. This is the NASDAQ. It doesn't matter if we look at the futures or the Qs. The chart is going to be very similar. So here are the Qs, right? Right now we're at 460. This thing was as low as what today? 452 something. That's a wide range for the Qs. Now, people are expecting it. I was looking at some YouTube videos, right? All the headlines are still bearish. They're all like, well, the dollar is going to collapse and blah, 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 and the bond market situation and blah, blah, blah. And here we are, we're green today. What a surprise, right? Everyone's talking bearish and we're green. This thing's up 6 points. I mean, it's not a lot considering the way the NASDAQ's been moving, but the high that you have to watch out for, right now, what we have in this situation is we have a higher low right here, right? That 430 area, higher low. And we have Wednesday's high right here. Wednesday was a notable high because that was when they made that tariff announcement, right? The 90-day delay. And we peaked right there. After hours, it went even higher, but that's basically the peak. It breaks through that, then we have a higher high. This thing is likely, if it can break through that, you're looking at this area up there. All right, that's 482. That it can do that like in one day if you get the right news behind it. Yes, I am. I am, Hussein. Actually, I can give you an update on that. I haven't done any updates because I'm still in the trade, and I want to update it when I close the trade. So today, I had a very interesting situation. Right, I sold on this day right here. Okay, on this day, I sold a call because I have 100 shares. My average price is 464. I sold a call at 461 because when I saw that spike, I'm like, I got to sell a call. I sold 461, but I sold 1 day out. This was what happened the next day, this red candle. So that call became worthless. I kept the money. That was $680 that I collected from that. Now today, I had another situation where we were fooling around 463, 464. I'm almost break even. Now, because of the call premiums, my break even price is actually lower. But my share price, my break even on the shares is still 464. But my actual break even is 457 because I collected $680, right? Now today I sold an in the money call at 462 when we were at 463. This thing sold off, right? Now, I'm still in that short call. I'm hoping that we close above 462. We still have some time. We can move 2 points by the close. I want to be assigned. I collected another $300 for that. So in total premiums, I've collected $1,000. If I'm assigned at 462, I lose $200 on my main position of 100 shares, but I've collected $1,000 in premiums. So I'm actually ahead. Now you may say, well, if you think this thing's going to 480, why not hold it? Because I don't like the cost basis that I'm in from. I don't like these prices. Okay. I started buying into this thing too early, and I've got what I think are not so great prices. Now, it's possible that we may find our way back up here in a few weeks. Who knows? But I'm happy getting out. If they want to take it at 462, please take the shares, and I'll be happy with that. If we don't close above 462 today, guess what? I keep that premium and I still keep my shares. So I will then tomorrow, if we're higher, I'm going to short another call. That's a great thing about covered calls. But you have to understand there was a lot of risk involved in that. I averaged into that position, which I actually made a video about when this market was selling off. You can watch it on my YouTube channel. And I averaged into that position basically in this area right here. That's where I averaged into it. And it was a little early and it was a little aggressive. Okay. Hey, Aries, how are you? I don't understand why you don't have more followers. Me neither. YouTube doesn't like me. Okay. I'm bald and angry, and YouTube doesn't like bald, angry guys. I don't know. I'll tell you what it is. I don't follow all the things that you're supposed to do. I don't produce enough content, and because of that, I have a small following. If you look at my competitors, and I watch people that really offer very little to no value whatsoever. They just talk a lot of nonsense, and they have nice followings, right? It's because they produce a lot of content. They're producing uploads a couple of times a week. They're streaming every day for 8 hours. I don't do those things. So remember, I've been streaming once a week for 3 years. And obviously, that's not a very good strategy. I'm not a very good content creator, right? But it's because I have other things to do, like trade. So, anyway, most of these content creators, they don't really trade. They pretend. And they do a really good job at it, and people believe the nonsense that they proliferate. That's the way it is. I can't change that. But anyway, I appreciate your support. You can do me a favor, press the like button if you haven't. Hey, Slow, how are you? Hey, in fact, you remind me. Here, let me put my little begging button here. Here, let me put this up here. Please like and subscribe and press the blah, 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 the notification button, because it helps the channel. Not like people do it. Usually I get a lot more people on Twitter. Let's see. Only 25 people on Twitter. Man, come on, you Twitter people. What is the problem? My Twitter, no one follows me on Twitter. Like, I get no one actually subscribes. I think they don't like me on there either. I don't know what it is. Maybe I talk too much reality. Anyway, but I appreciate the compliment. So that's my update on the Qs, right? But let's talk about now what we anticipate for the Qs this week. So like I said, if we're bullish, we close bullish today, maybe we gap tomorrow or something. If I'm still in my position, because we're right now, we're at 460 and a quarter. We have 35 minutes for this thing to get up to 462. If it can't get there, I keep my premium and I keep my shares. Right? And I sold in the money. So anyway, because I want to be assigned. I want them to take these shares. All right. Anyway, if you don't understand covered calls, like it sounds great and everything, but I took a lot of risk. This position, by the way, at this point, I was minus like $6,000. All right. And on this candle right here, I made it all back like in an hour. All right. So that's why I averaged into the position, and I was very careful with my sizing. I was only buying 10 shares at a time. If I bought like 100 shares at one price, I would have had a much worse price. All right, so let's look at a smaller time frame now. So here's a 4 hour on the Qs, right? Now again, you can see the higher low much clearer, much more clear. In fact, we have like a wave pattern here, right? There's a wave count here. 1, 2, this is 3, right? That announcement day was 3. The tariff delay, that was wave 3. Wave 4, we never really overlapped. I mean, you could say we overlapped a little bit, but when it comes to like pin bars like that, it doesn't really. That's when you kind of have to use your judgment because there's a pin bar there, right? So it's not a clear cut overlap. So this is basically a wave 5 we're in. Excuse me, on this time frame. And that wave 5, if it's truly in fact a wave 5, we should make a higher high, and this would be a good area up here to reach for the higher high. All right. Again, that's in the 478, 480 area. Maybe we get there tomorrow. It's all a matter of news, right? Like I said, tomorrow we have Wednesday, we have retail sales in Powell. So who knows? Maybe some other surprise news comes out. Also, I know companies are reporting now. So that can also spike the NASDAQ after hours. Hey, Sean, how are you? How's everything going? Good to see you. So for this week, that's what I'm anticipating for the Qs. I mean, it looks good right now. We have some potential news events that can basically get it up to one of these resistance levels, which would be ideal. And again, my plan is to sell another call because I want them to assign me, take my shares away. Please take them. I don't want them, but I want to get paid. So that's the plan there. Does that make sense? So this looks bullish. So a lesson learned here, don't get caught up in all the nonsense, because if you are looking at the news, especially back here, right? All that nonsense that they come out with, oh, China, reciprocal tariff, blah, 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 blah. It's all nonsense. If you understand your levels and you understand your general structure, you can assign probabilities. And that's really all that matters, because no one at this level, no one was calling for a reversal. There may be a couple of people here and there, but everyone's like, oh, this market's just going to keep going. Everything I saw on YouTube, oh, this market is just going to keep going. It's just going to keep going, right? I don't see it it doesn't seem to be going lower right now. Now, overall, is this thing in a bearish trend? Well, yeah, there's a lower high here. We have a lower high, right? We have this situation, right, with the lower low, but that lower low was the tariff announcement, right? But the delay brought stability back, because now there's 90 days of delay. Okay, so all that negativity priced in had to get priced out. Okay, cool. So maybe we fluctuate back up to here. This, like I said, this would be a very common thing to do, where we produce one of those V shapes. It happens all the time. Even if this market's not going to continue higher, there's still some room to play with here. Maybe we find a resistance up there. Maybe it pulls back again. I'll tell you one thing about the Qs. I don't think we'll see that this week, but one thing about the Qs is this area right here. That's a very highly likely higher low area for the next few weeks. If I see that area, hopefully I'm out of my shares. If I see that area, I'll start accumulating again. But this is the area that I will begin this time, not up here. See, my plan up here was I was looking for the failed low. That's where I started, up in here, and we broke hard. So if we're going to be in this bearish environment, then lower lows are likely. If I'm going to start, I'm going to start small here, like 5 shares, okay? And then I will anticipate the lower low, something like this, right? We may get into the 370s. But that's going to require some pretty negative catalysts to get that low. But I will only be doing 5 shares at a time, not 10. And again, try to accumulate 100 shares so I could sell a call. I'll just do the same plan over again, just less aggressive. Does that make sense? So that's my plan with the Qs. And this is going to apply. A lot of markets are going to look very similar to this. We can take a look at the SPY, right? It's going to look very similar. Look at that. It looks exactly the same. Do you realize that was a huge opportunity to buy into? If you just ignore the nonsense and drama around you, you just have to look at the probabilities. Yes, it made a dramatic lower low, but you have to understand that this administration, you can say it was manipulation, front running himself, all that kind of stuff, but you have to understand it is their agenda to do such things. They're going to try to do such things because they measure themselves against the stock market. So what's he going to do? Come out and keep saying bearish things? right? They want to spike the stock market. Like that's their goal. So you have that on your side if you understand what you're dealing with. So levels aside, you kind of have to be familiar with your environment. This was a very unusual situation, but you just have to be able. It all comes to, can you take the chance? That's what it comes to. Can you take the chance? If you're not willing to take the chance, you won't get moves like this. You can also lose, but that's why you have to control your risk somehow. I was doing it with sizing, and I was prepared. If this thing just kept going, which was a possibility, I was prepared to hold on to the cues simply because they are the cues. I wasn't going to keep putting on more and more and more. I was just going to stay with my 100 shares, and I was going to wait until the cues stabilized at some point because it's the cues. It's 100 top NASDAQ stocks. At some point, they're more likely to come back, at least give me a chance to minimize my loss, if not break even, right? But you have to have the confidence to be able to stick that out. And I sized responsibly. If I sized too big, I would have been in trouble. All right. Anyway, that's the cues and SPY. Let's take a quick look at the bond market because there's been a lot of talk about the bond market. All right. So let's go to ZN1. Now, guys, let me know if you want to see anything. Because again, I'm not doing Trade Scanner Pro in this session. That was earlier today, which if you guys haven't seen that video, you should check it out. I had a nice trade. I had one trade. My first trade was green, and I was done. Very simple. Okay, and the market sold off after that, and I was long. So anyway, so here's the ZN1. But let's take a look at a weekly chart because that's where we get more perspective. Look at this. So there was a lot of talk about this situation, right? With the bond market pulling back and this and that, and it doesn't make sense and it's unusual and blah, blah, blah. Okay, there was a resistance up there. That line is a resistance line that I've had drawn on my chart for quite some time. And it goes back to this time here. You see that? That's not a coincidence. So it's just the catalysts line up and you get moves like this. Okay, so all right, yeah, we can take a look at the dollar index. It's actually the dollar index is going to look very similar to this, Peter. So this is, the 10-year note, and when prices sell off, yields go higher, right? And when prices rise, yields go lower. So does this bond market really like it's doing anything spectacular? Yes, it had a big one gigantic move. Yes. Okay. That was unusual. But just look where we are level wise. Look at this. Look at this. What does that look like to you guys? That doesn't look like a trend to me. Right? That's a consolidation. Yes, the general trend is bearish, but we haven't broken the lows yet. When we break those lows, that means yields are rising and they're out of control, right? Yields will be going nuts. That's when you have to watch out for the bank failures. Although the Federal Reserve just recently announced that they have a bailout fund or something. Can you explain the bonds, the dollar, and the yields? Sure. Well, so bonds are like where the game begins. Bonds are the cost of borrowing money, right? That's what bonds are. That's what they represent, because they are a reflection of interest rates. Interest rates are the cost of borrowing money. So we could look at the US 10 yield, US 10Y, which is the inverse of this, right? Look, it's the inverse. So yields look like they're poised to break higher. So the point is this, this is all part of something called the business cycle. If you Google the business cycle, Pring-Turner business cycle, it explains this very, very nicely. But so what this is bond prices sell off, yields rise. If yields rise, that basically strengthens the dollar, right? Because you're going to get more interest when you borrow money. So it strengthens the dollar. It also reduces inflation, which can lead to like deflation. So stronger dollar typically means dollar can buy you more of something, and that means prices go lower, right? So that's why stocks go lower. Things like oil and gold and things like that typically go lower in a deflationary environment. And that has a lot to do with interest rates. Okay. Now, if interest rates go lower, Because wait, let me just mention this. When interest rates are going higher, money is basically coming out of the market. All that extra money in the market is coming out, right? But when you have the opposite, lower interest rates, that means money is going into the market because there's more money, there's more of a money supply in the market. That means money's cheaper. So interest rates are lower. That's usually when bond prices are rising, right? So when we have, that's an inflationary environment. When we have rates, interest rates going lower, stock market loves that, okay? Things like oil and gold and all those things, they love that too. Cheaper dollars. You can also get cheaper home loans and cheaper car loans, and everyone's borrowing money. It's usually what leads to an asset bubble, or what they usually do that, they lower rates to stimulate an economy. That's why they do that. But if you do it too much or excessively, and there's too much money floating around, you run into an inflationary problem. You go to the supermarket and you pay, $20 for eggs. So anyway, well, so how they correlate is bonds move first, then stocks, then everything else, like the gold and the silver and all that. So interest rates lead the market. So when we have rising rates, that means the markets are probably going to sell. They don't move one to one. You have to understand. So when you have rising rates, for example, like right now we have rising rates, but they're rising for the moment. Okay, really rising rates in this situation, we have to break out. Right? Bond prices are going to have to break out of that low, and this is going to have to break that high. If we do that, then the effect takes a few months, but it will lead to lower stock prices. It puts pressure on stocks, and it puts pressure on things like oil and all those things, right? That's how it generally works. But just Google business cycle. I mean, I could talk about that all day long, but that explains the relationship. So that's why I say everything begins with the bonds. The bond market is like the basis of everything. And it's been range bound. So here's the point that I want to make about the bond market. All this nonsense news, the bonds, blah, 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 China is selling bonds, blah, 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 right? Okay, that may be true, but there's nothing going on here. Yeah, we had one big day. That's strange behavior for the bonds. Yes, I agree with that. It's the biggest candle we've seen in a long time, but this is a weekly candle, but we're still inside that range. Okay, no problem. We're still inside this range. So nothing is really going on here, in my opinion. All right, now we break above the range. Watch out for bank failures, because remember, banks buy bonds, right? They have these gigantic bond positions. And if rates go higher, that means their bond positions sell off and they get margin calls. That's what happens. So watch out for spiking yields. And remember, yields trade in a free market. The Federal Reserve can have an effect. That's what the FOMC meeting is about, the short-term interest rates, and they can have an effect on the yields, but they don't control the yields. The yields trade freely, at least in theory. So if the bonds continue to sell off, this thing spikes, watch out for bank failures. Okay, that would be an extreme situation. All right, but my point, the reason why I'm showing you this chart is because they make a big deal out of all this nonsense, and if you consume it and you believe it, you get what you pay for. Right? That's why no one likes me, because I talk about reality, and no one wants to hear reality. People want to hear, just follow this, just follow that, follow this oscillator in the news and blah, 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 and you will make millions. That's what everyone wants to hear. All right, so anyway, that's the bond market. Now let's take a look at the dollar index Peter wanted. So the dollar index, as you will know, DXY, right? The dollar index this is the strange thing now. And this is what caught a lot of people's attention, right? With the bond yields rising, this should be rising. And it's not. Okay? It's at the bottom of the range. Now, so that's where there's something strange going on here. This is where it's unusual. With a move like that in the bond market, the spike in the yields, we should see a spike in the dollar. So the talk that I've seen, the consensus that I've seen is that people are losing faith in the dollar. Countries around the world are losing faith in the dollar, and they're selling dollars because they don't believe that the dollar is going to be the world reserve currency much longer. It's going to lose its status, right? And that's what this is reflecting. Now, that's what people are saying. Do I believe that? I don't know. I mean, I usually tend not to believe people, especially when they're all saying the same things. I'm a contrarian. And all I see here is similar to the bond market is we're in a range. That's all I see. And we're at the bottom of the range. So the dollar is in a place to rally. Look at this. The dollar is this entire structure on the dollar, because the DXY is the dollar index. So it's the dollar against a basket of currencies, right? And obviously it's losing its value. Excuse me. It's losing its value. Excuse me. It's losing its value relative to these currencies. That's what this means right now, but it hasn't broken out. In fact, look at today's candle. Well, what I was also pointing out was this structure I was trying to point out is that this is a higher low relative to this move here. Remember, this is a weekly chart we're looking at. So relative to that move, this structure is just a higher low consolidation so far. Maybe it breaks. There will have to be some type of catalyst to break this thing, right? And I don't know what that could be. Obviously, this tariff stuff has caused this move. So maybe they lift the tariffs. They say that the reason why they came up with that 90-day delay was because of this, because they saw the dollar was going to collapse. So they held back to basically, hold to prevent that or something or whatever. That's what I saw. But again, that's garbage that I'm following from YouTube. So, but some of these people, excuse me, sorry, I don't like coughing into the microphone. Some of these people make some economic arguments that seem plausible, but I don't trade on these arguments, and I don't really take them very seriously. I put them in the back of my mind and say, okay, let's see if price coincides with their argument. And that's it. I let price tell me the truth because price doesn't lie. You guys see that? So this, while this looks pretty bearish on the dollar short term, because yes, this is bearish. This is definitely bearish momentum. You have to respect the bigger picture structure. So as long as it stays inside this range, I don't know, the dollar really isn't doing anything. If we push back up into the midpoint of the range, the dollar really isn't doing anything. So watch these other currencies. The dollar is in a place to rally. So if I was going to bet right now, I would be looking for longs. I wouldn't be looking for shorts here. Now, I could be wrong. Maybe we break out of the range. Again, it's going to be a matter of catalyst. Maybe Powell says something on Wednesday that spikes the dollar lower. I don't know. But they're going to be paying very close attention to what he says. So all I know is the dollar is in a location where this thing can rally. It's just a matter of, do we get the confirmation from somewhere? This is an inside bar right now, but we still have the whole week before it closes. Do we get a bullish candle here? Do we get like another pattern like this where we had this little failed low situation back here? You see that? So we'll see how the economic news plays out this week, and it may shape this further. But look at the location first, and then understand that there's a higher probability of reversal unless the market proves otherwise. So it can break lower, but if I had to bet money, I would bet on the long side. It's just a little early because we have no confirmation. Does that make sense? So I don't let economic news confuse me. I look at the charts, I consider the economic news, and I look at the charts in light of that. And I say, okay, do the charts align with it, or are the charts showing me something else? And this doesn't exactly align with their extreme bearish views on everything, right? Yes, the short term, I can understand why people are bearish because all they see is this. They're not paying attention to the history here. Usually people overlook that, especially all these experts on YouTube and all other stuff. They only look at what is going on now because that's what they're going to get attention for their videos on, right? Because they want to get your attention now, and they capitalize on that. Anyway, that's the dollar index. Make sense? Anyone want to see anything else? Any altcoins or anything? Let's see. What have we not covered? I went over the NASDAQ. We went over Bitcoin. What else you guys want to look? I want to look at. Want to take a look at XRP? That's usually a popular one, right? Everyone thinks XRP is going to be at like $12 or something. USD. Want to take a look at that? I mean, look. I'd rather see gold. Okay. UTXO, how are you? Good to see you. Yeah, we could look at gold, no problem. Yeah, I forgot about gold. And oil. We should look at oil too. So let's take a look at gold. XAU, USD. So gold has been nuts. Okay. Gold is right now 32, just around 32.10, whatever. It's minus $26 right now. On what was this? I guess this was that bond sell-off day. Gold went berserk. Now that's like nuts. Oh, nice UTXO. I sold the Q. I sold 462. Right once I finished my stream, I sold the call at 462, and it just sold off the whole day. I collected a nice $300 for that, and on today's call, where are the Qs now? Hold on, let's go back to those Qs real quick. 459. Yeah, I think I'm going to keep the money. We only have 12 minutes before the market closes. So I'm going to keep that money, and I'm going to keep my shares. So I'm going to sell another call tomorrow, like I was saying at the beginning of my stream. But nice. Yeah, a lot of options activity, man. A lot of wild option stuff. The premiums are out of this world because of the high VIX. So that was a great time to be selling options. Just have to know what you're doing. So anyway, you get some really fat premiums without having to take a whole lot of risk. So here's gold, right? And gold, there's no question. Gold is berserk. Let's go. This is the weekly chart on gold. Okay, this is weekly. Let's go to the daily chart. Here's the daily chart. And I mean, I don't know what to say about gold. It broke out. It broke out dramatically. Now here's the thing. This could be potentially a head and shoulders forming, right? That could be a shoulder right there. And this could be the top of the head. We may pull back much more dramatically. I would watch for that pattern. Now, fundamentally, do we have a situation or an environment for gold to reverse? Not really. Unless we need we're going to need something deflationary, not inflationary. Just like we were looking at, I guess maybe that tariff situation, but if there's instability somewhere, this is not going to go lower. Okay. There's also talk about revaluing gold. I don't know if you guys heard about that, but they're considering it. The executive branch needs congressional permission to do that. But the price, do you know that the government gold is priced at $42.22 and hasn't been repriced since the 1970s? Do you guys know that? So on their balance sheet, the gold that they own, it's priced at $42.22. But the reality is gold is at $3,200. So if they reprice that and say, well, it's not worth $42, we're going to reprice it, they're going to basically create money without having to print it or borrow it. And they can erase the deficit with that, basically. There's talk about that. I thought that was very interesting. Yeah. So, but that's their price of gold, which means that they can basically change their balance sheet with just a simple accounting transaction, and they're going to have all this extra money. But again, they need approval to do that. Trump can't just do it. But there was talk of that, and I'm like, man, can you imagine? So in that scenario, if they do that, UTXO, gold is going to continue higher, because if the government says, okay, gold is now on our books is going to be worth $3,100. If they do that, then the market is going to price a higher gold in, because they're going to say, well, if the government needs more money, they're probably going to adjust it higher. So gold may spike up to 4,000 in a situation like that. Right, because the gold is they're going to anticipate, the market's going to anticipate that the government is going to use that tool again if they need more money. Just revalue gold and then sell some of the gold. We'll have a ton of money. I was going to use some bad language there. Anyway, so so that's a consideration. Again, I don't know what the probability of that is, but there's talk of it. So that's not what spiked gold. Okay, what spiked gold is the tariff and the bond situation, right? From what I believe. But fundamentals aside, technically, there's nothing to do here. Gold is at a major high here. Bad place. Like, I wouldn't short this. Okay, I would not short this. You have an inside bar developing right now, which is typically a momentum continuation pattern. Gold would be a great choice to day trade, especially if you break above today's high. There's some room to go a little higher, right? Because that would be an inside bar continuation pattern for the daily time frame, right? You get something like this maybe. So, and with Powell speaking on Wednesday and all that, it's not that far fetched. So the mistake here to avoid is don't short this thing. I don't care if it looks like it's a top. There's been many points where it looked like it's the top. If you're going to buy it, wait for a pullback. Look, there was a beautiful pullback here. That was a very steep pullback. That was like 150 points. Okay, and it was a failed low. Look at this failed low, right? Failed low relative to that low. Look at this. In a bullish environment, this is the best type of failed low you can get. All right, this right here, because the bullish structure. This is clearly bullish. There's nothing bearish about that structure. Nothing bearish. So when you see a situation like that, that's a high probability long. Maybe we get something else like that. Maybe gold forms another higher low and another failed low situation. Maybe gold retests this low. Those are the scenarios you have to watch for. Don't get confused by all the news and all this. Just the chart can steer you the right way if you understand how to assign probabilities to these levels. The chart is all you need. I don't have oscillators on here. I don't have all kinds of nonsense on this chart. I'm just looking at higher lows, higher highs, and I'm looking at support and resistance levels. And then from there, I can say, okay, do I want to work on the long side or on the short side? Which side has more probability? The long side. Okay, that was pretty easy. Now I just have to find levels. Where do I go long? Here's a support right there. That's an old resistance, potentially new support. That's a place to start watching for. What price is that? 31.41. So you could round that to 31.50. Okay, that's about 60 points lower from here, something like that. So that's how you come up with a plan. Now, if gold goes back there, especially intraday, that's going to be a very interesting level to watch. If there are confirmations there to go long, there are going to be some nice longs there potentially, even if it's intraday, where you're grabbing, 10 points, 20 points, something. That's a lot on gold. The chart is all you need. Yeah. That's funny, UTXO. Yeah. But it's true. You don't really need anything else. People overcomplicate this. Remember, as retail traders, we have the worst information available to us at all times. You go on Twitter, you go on TikTok, you go on YouTube, and because you're looking for certainty, you're looking for someone to give you the answers. So you're looking everywhere, and all you're doing is consuming more and more garbage. You have to stop doing that. The chart tells you everything you need. You just have to know what to look for. People overlook this because, there's nothing there. There's a lot of information here. But whether it sticks or not is another story. That's only up to the market. I can't forecast where gold is going to go. I have no idea. Maybe it goes higher, maybe it goes lower. But if it goes lower, I have inflection points that I could now anticipate a certain type of behavior. What I'm doing is I'm measuring human behavior. That's what I'm doing. This is not about math, math and science and blah, blah, blah. No. The statistics that we are measuring, or the probabilities, have to do with human behavior, how people are acting in particular areas. And the reason why people act in these ways in particular areas is because other people are stuck. There are shorts and longs stuck in this location right here. So especially shorts, if price retests it, those shorts buy because they want to break even. And then new longs jump in. That's what holds the support. That's the theory behind it. So when you understand that, you have inflection points where you can anticipate something. The key is the confirmation, though. I could draw 10 million lines on this chart, and I can give you all kinds of levels, but if there's no confirmation there, the level means nothing. That's why the Trade Scanner Pro is so helpful, especially intraday, because you're getting a confirmation at a level that you were anticipating, because you do that part first, And then you have a profit objective and a risk all defined for you. That's the whole thing, right? So that's gold. Any questions about that? I think gold is wild, and I think it's still a long. It's just high risk. I wouldn't go long now as an investment or anything. I wouldn't be buying gold now. I would just stand aside. Don't short it. Just wait for a pullback. This thing is super strong. If something changes, though, if something changes, this thing can just break and we can get something deflationary. So you got to be careful because some unexpected news. If you're a news insider, then yes, the news will help you. If you're not a news insider, then let everyone else figure it out. Use the levels and use your trend structure to make your decisions. All right, whether you're investing, whether it's a swing trade or a day trade, it's just a matter of time frame. All right, let's take a look at oil. So oil, CL1. Okay, so here's crude oil. Now oil, this was a big thing for them because oil is like is a big source of inflation or deflation. So they've been wanting oil to sell off. That's been like a goal for oil to be cheaper because they want energy prices to be cheaper. Because if energy prices are cheaper, inflation gets lower. And then they can harass Powell to cut interest rates because see, look, no inflation. We need stimulus. Start cutting those rates, Powell. Right? So they use oil as an excuse. So let's just take a look. What is going on with oil? Oil got hammered. Okay, hammered in this situation. Let's take a look at a weekly oil. This is where oil is now. So this kind of gives you a sense of you can use this as a gauge for inflation since energy is such an important component of inflation. We have this support area right here, which has been dramatically broken. Okay. But we have a bullish pin bar on the weekly developing now. That was previous week, right? And it's closed. This candle here from the previous week is closed. If we break the pin bar high, this thing may be on its way back up. Higher oil means inflation again, right? That's how it can be interpreted. So I wouldn't be going nuts shorting oil or any type of oil products right now. You're facing a bullish pin bar in an area that, I mean, look at this. This was the previous low on oil, the range low. And we broke lower, but look where we are now, right? We're not that much lower than this low. That can still qualify as a failed low. Look at the comparison. That's where we are right now. That's not that far. We recovered all of that bearishness pretty quickly. So, that's a bullish sign for oil. Now, whether it continues or not is another story. But when we zoom out on oil here, let's just zoom out a bit. Just kind of get a sense of the bigger picture, right? I mean, look at this. This isn't exactly bearish. It could be the beginning of, if this break sticks and we break below that pin bar, then yes, maybe we have a deflationary trend in oil. But this is not exactly bearish. In fact, it looks like what? It looks like the dollar, doesn't it? So just something to keep in mind. I can't forecast and say which way oil is going to go, but I can recognize that bullish pin bar and recognize that someone bought a bunch of oil. And if this pin bar low, if these levels hold, if we don't go lower than this level, right, and we break above this level, the pin bar high, that would actually be a buy signal for oil on the weekly time frame. Now here's the current, we only have 1 day so far this week, which is that candle right there. It's only reflecting 1 day. But this could be bullish. This could be a bullish situation. I mean, if I was going to bet right here, I would probably lean on the bullish side. Now, it's tricky because, again, there is bearish momentum. So we need to see a sharp recovery. If this is going to recover, it needs to be kind of sharp. So we'll have to see how the week plays out. But you guys see that? So oil is an interesting gauge because they use this, as part of their inflationary talk, right? So I'd be watching. If this thing spikes, I'd be watching for this level over here. If this thing can work its way back up. And that's around 66.5, something like that, all right? When oil right now is at 61, just over 61.5. So it's got some room. I wouldn't expect oil to get back up to here anytime soon. This is a little unreasonable right now. We would have to break this high first. This high right here of $72, 72 and a quarter. We'd have to break that first if that's going to point to testing such a level, which again would be pretty inflationary. Again, we'd be facing an inflationary situation. Maybe the tariffs lead to that. I don't know. This tariff situation can be very confusing. And that's all people talk about. Tariff this, tariff that, tariff this. It's like the new word, right? Tariffs. So don't get misled or confused by that. The charts tell their own story. Listen to the charts because there's a lot of smart people with a lot of money out there who know how to bet this the right way, and they leave their footprints on the charts if you know what to look for. But if you don't and you just follow what people are saying and you're like, well, strength in numbers, consensus, blah, 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 you're asking for trouble. Okay. So anyway, let's take a quick look. I have this Bitcoin situation here, right? This is a 1 hour chart. I just want to do an aside over here with the Trade Scanner Pro. I'm going to turn off these moving averages because they're not really relevant right now. I talked about them in a previous stream, but this is an hourly chart. Just look at this. A long was called a few days ago back here. Look at this. That was the long. Since then, it touched the entry price one other time. So there was another entry in this a few hours ago. Look at the trailing stop. It has reduced your risk by just about 50%. Now, the risk on this time frame is going to be pretty high, right? The 1 minutes are very high. So on a 1 hour, 1,400 point risk. That's a lot of risk. So you take smaller size if you trade the 1 hour chart. And the reward objective is 21.31. That's the profit objective. And it was almost there. I guess overnight. It was almost there. And that was at what price? 85.8, basically, or 85.8 and a half. So it was almost there. That's a lot of money, right? So the Trade Scanner Pro, and especially this time frame, doesn't have tons of signals and lots of noise like, the 1 minute and the 30-second chart that I trade during the market open. So look at this. Would you normally take a trade like this? Would you even know to take a trade like this? Would you know that there's a profit objective right here? You wouldn't. The Trade Scanner Pro defines all of that for you. I recommend these time frames for the beginner traders. 1 hour, which is a swing trade time frame, 30-minute. If you go lower than that, like 5-minute or something, or 15-minute, those are more like day trade time frames. Those are more appropriate for beginners because the momentum is not constantly changing. This momentum is nicely intact. Look at how long. I mean, you had this bullish movement, okay, off of 76K, which was the failed low that I talked about weeks ago, talked about that. And it found another failed low over here, and you got a signal to go long. Like there was no reason to be shorting this. And if you were looking for long signals, you got your confirmation. Now, to be fair, there was another long signal over here. This one probably stopped out. Let's see. Yeah, this one was a minus 1,154 point stop, okay, on that one. But it turned into the failed low and gave you another signal. So it's not like this is happening. This took hours. This was hours apart. So, sometimes you give it a try like that, but then the second one goes. When you see a pattern like this, that's really compelling. And you would have made your money back. All right. Anyway, so if you've never tried the Trade Scanner Pro out, you see the link here on the screen. You can try it out for 14 days for free. There's a link in the description that explains how the Trade Scanner Pro works, so I don't have to explain it here. And when you get it, though, if you subscribe to it, just make sure you turn all these buttons on. You have to go to the settings panel. You have to turn trailing stop, show previous trade, and heads up. You got to turn those on. Don't turn counter trend on. That's for very unique situations, and it can be very confusing. If you watched my stream from earlier today, it was a counter trend trade that I had to take. But I explained every step of the way because I know it can be confusing for a beginner. Small time frames are confusing. All right, but it's all explained in that stream. So check it out. All right, so I have any questions? Any questions from you guys? Let me see how many people are watching. Let me see. Do I have to cry in the corner over here? Yeah, well, maybe a little bit. Yeah. So, any questions, you guys? We looked at oil. We looked at gold. We looked at Bitcoin. We looked at the NASDAQ. Man, we looked at a lot of stuff today. Qs. Yeah. Oh, yeah, Sean. Yeah, I talked about the Qs a long time ago. But what do you want to know about them? I talked about the Qs actually as a second symbol after Bitcoin. I looked at the Qs. What do you want to know about that? I mean, I can just recap it for you if you want, real quick. Okay. Yeah, I talked. It was like the second thing I talked about after Bitcoin. I spent probably about a good 10 minutes on the Qs. Okay, no problem. Yeah. So, but like I said, I am planning. I sold a call today, and I'm planning to sell another call because that call is most likely going to be. But we're closed now. So where are the Qs? 457 is the close. Is that right? 456. Yeah. So that's on the weekly. So I get to keep my premium. I sold a 462 right after my stream this morning. I went onto my account. I sold a 462 call while the Qs were at 463. I collected 300 and something dollars for that, and now it's worthless. And I still have my shares because I was hoping to get assigned at 462, but we're at 457. So I still have my shares. So tomorrow, if we're bullish again, guess what I'm going to do? I'm going to sell another call, as Jerry Seinfeld would say. Just do a quick 10-minute macro video. And when you talk about, well, UTXO, you know what? I plan to do uploads because that's something I don't do. So I'm going to do like some upload type videos because those are more like people can go back and watch and they're more like a library. And YouTube may promote those not the same way as live streams. You know what I mean? So I got to do uploads. I have like no uploads. I don't have any like recent uploads. So I'm planning to do that. Still long TQQQ. Oh, nice. Okay. Oh, that's kind of tight on time. Okay. Nice. Nice. Okay. Yeah, Sean. I mean, I don't know. One thing just to consider, you got to be careful with when you're long. You need like I had a. I'll just say this real quick and then I'll sign off. I had a I had a bull spread that I bought. It was like the 480, 485 bull call. I bought June's. Okay. I bought 3 months out when we were selling off and the Qs were like at 470, 460. I bought that June call. I got $175 I paid for the spread. And then the market, then the Qs went to 400. And I'm like, man, this thing sucks. And I had two calls and that was for June. And when we turned around on tariff delay, when we had that, my position was up like $60. I sold it. That was for June. So just so you know, I'm buying 3 months out. If I'm buying calls, I'm buying 3 months out. Because if you get one pulled back the wrong way or something, you're not going to have enough time to get that time value back. Because the time value is working so much against you, especially in this environment with the wild premiums that we're getting. Because we're getting inflated premiums, so the time value is going to be tough to go against. So buy yourself some more time. Consider that. Yeah. Okay. I sold half before. Okay. Yeah. So if you want to protect yourself against that, I would do at least 3 months, right? To protect yourself against that time decay, because 3 months it's not as severe as it is like front month. Front month, forget it. Or anything less than front month, forget it. If you're wrong, like if the market goes against you just a little bit, forget it. You're not going to be able to get that time value back. So that's where they do the short spreads instead. Like if you're doing bull put spreads, but I don't like the assignment risk. That's why I don't do them. I don't want to get assigned a bunch of. If I'm doing 2 or 3 contracts, I don't want to get assigned 200 or 300 shares, right? And then my long put isn't protecting me because it's in between, right? If it's a 5 points wide and it's in price is in between, I get assigned. I don't want to go. I don't want to deal with that. So that's why I'm doing long premium. Even this environment is really not ideal. It's not ideal for long premium, but I'm doing it anyway because I just like to keep the risk under control. So just buy more time. All right. All right, you guys. Thanks, Sean. So yeah, check that stuff out. I talked about it earlier. Guys, thank you for watching. I will be streaming again on Wednesday. Remember, we have all that news coming out on Wednesday, Powell speaking and all that stuff. So, at the market open, please join me for that. Check it out. Let's see if I can put a trade together. And if you missed today's, check it out. It's on my channel. And, you can see how it played out. All right. So if you have any questions, you know where to find me. Can you do a spread on SPX options? Yeah, yes, you can. You can. The thing with SPX options, though, they're very expensive. Like, because it's such a big contract. It's like 10 times the ES. So if you can afford it, yeah, you may be able to get away with it if you're doing vertical spreads. It may not matter as much because I don't think it matters as much if you're doing. But if you're doing any type of short premium, the margin requirements are through the roof. So you have to have a lot of money to meet those margin requirements on the SPX. But you can trade options on. In fact, they only trade options. That's all that trades on that. And it's very popular. All right, you guys. So great question. So you guys know where to find me. Marketpremarkets.com. If you have any questions, please check out the Trade Scanner Pro and give it a chance for 14 days. You can cancel anytime. It's very easy. Also, if I reach out to you unsolicited and I'm asking you for money, it's a scam. Please don't get scammed. Report the person, block the person. I don't do that. Neither does Stian, neither does Alex. Even though they're not in the chat here, people still think that whatever, and people use their names. All right. So anyway, all right, people. So thank you. Enjoy the rest of the day, the rest of your evening, wherever you are in the world. And thank you so much for watching.